In this video, I'm going to talk about active income and passive income. I wanted to make a video on active income and passive income. And I think this topic is especially relevant because I've been making a lot of videos lately on the idea of focus and how focus is an important element of business strategy. This is an interesting time to be making these videos because if you look out at what business gurus are saying out in the business world, I would say the most common business advice out there today is the idea of diversify your revenues. So you hear this all over the place. People say this over and over again, diversify your revenues. So here I am making these videos telling you to focus, and everybody else is telling you to diversify. So what's going on there? Well, the reason for this contradiction really lies in the difference between active income and passive income. And so this is a really important distinction to understand. Let's start by talking about what active income and passive income means. Active income is talking about transactions that require effort. Passive income is talking about transactions that require little or no effort. These are very general definitions. And if you're dealing with taxes or you're dealing with the IRS, they actually have a much more specific definition, and they go into great detail on defining what active income is and what passive income is because it affects your tax rates. But for the purpose of this video, I really want to stay at this general definition because what we're interested here in is how this impacts business strategy. So let's talk through some examples. An example of active income would be like a job. So something where you get a salary, where you're putting in effort and that derives income. It could also be a type of work where you have billable hours. So if you're an accountant or you're a lawyer where you're having billable hours, you're having effort that generates that income. This could also be something like a service contract. So you draw up a contract for some work you're going to do, and that generates active income. Passive income is a little bit different. So passive income comes from things like royalties, as an example. It could be rent from real estate properties. It could be online transactions. It could be investments, where if you purchase stock, for instance, and you receive dividends. All of those are examples where you have to do little or no effort and money just drops into your bank account. Now, when you explain these two different types of income to people, people tend to get really excited about the idea of passive income. Because when you compare the two, passive income sounds really attractive. I mean, why would you put in all of the effort and all of the work to do active income when you could pursue passive income, do nothing, and money would just fall into your bank account? So it's a really attractive idea, but there is a catch. The catch with passive income is that passive income carries a lot of risks that you don't have with active income. What I want to do is I want to compare these two side by side. So let's start with active income. A defining feature of active income is that you have a lot of control. Because you're doing the work, that's directly impacting the amount of income you generate. So if you do good work, you're going to make good income. So active income gives you control. Now this is contrasted with passive income where you have very little control. So if you're not actually putting in any effort, you are at the mercy of forces that are outside of your control. So you're relying on things like changes in the economy, changes in the mood of your customers, changes in technology. All of these things are happening all the time and are impacting your income streams. So passive income, because you have very little control, carries a lot of risk that you don't have with active income. Another difference is that active income requires a lot of work. And because it requires work, that actually creates a barrier to entry from other competitors. Because nobody likes to do work. So the very fact that you're putting in all this effort kind of creates this barrier to keep competitors from swooping in and stealing your market. Well, if you compare that with passive income, where there's no work involved, there's very low barriers to somebody else coming in, doing the exact same thing you're doing, and stealing your entire market. So that's another risk with passive income. The third difference I want to talk about is that with active income, there's an opportunity cost to diversification. Because active income requires work and there is a time commitment there, any time you peel off from this active income, you're creating an opportunity cost. That's time you could be spent generating this income. So if you diversify your active income, you're creating this opportunity cost. Well, when you compare that with passive income, that opportunity cost is not there because you're not spending any time doing any effort. So there's very little cost to diversifying multiple income streams with passive income. I think what you notice when you go through this comparison is this common theme that there are risks associated with passive income that aren't there with active income. And so when you think about different strategies, it makes sense to have a different strategy for active income than you would with passive income. With active income, it makes a lot of sense to focus because there's this opportunity cost when you diversify. With passive income, it makes a lot of sense to diversify your revenue streams because there's very low opportunity cost to do that, and it helps mitigate some of these risks. I actually created another YouTube video on diversification, so you can find that if you just search my YouTube channel. But diversification is a very important concept when you talk about stock investment. Stock investment is an example of passive income, and it makes a lot of sense to diversify by purchasing many different stocks instead of focusing on just one stock, because that protects you against the risk. When you deal with passive income, it makes a lot of sense to apply these diversification concepts because it's just like any other investment portfolio. Now I want to end with talking a little bit about the historic perspective here. Because this piece of business advice of diversify your income has really gained in popularity over the last 10 years. If you read a lot of older business books, they don't spend a lot of time on this concept. And so I think it's really important to understand what's going on and why this piece of advice has become so popular over the last decade. What's happened in the last 10 years is the emergence of Web 2.0. And Web 2.0 refers to the growth of online social networks. Well, the development of these networks has created an opportunity to create all sorts of new online businesses based on passive income. So these could be businesses that generate their income through things like ad sales. They generate income through transactions on websites that are just fully automated and require no effort and no work. So there's all these business owners out there who've created these new businesses that are completely reliant on passive income. Well, like we've discussed before, passive income streams carry with them a lot of risk. And what's happened over the last 10 years is there's been a lot of business owners who have been burned by this, because a simple technological upgrade can instantly drop your income stream and affect your passive income. So this has caused a lot of pain and frustration in people, and that's really driving this business advice of diversify your revenues. So I'm not saying this is a bad piece of advice, But what the point I want to make is that this advice really applies to a specific situation. And what you should really do is you should really think about where you want to go with your business. Do you want to have a business based on active income? Do you want a business based on passive income? Or do you want a hybrid of the two? And depending on what you decide, that's going to dictate your business strategy. If you liked this video, go ahead and click on the subscribe button. I release a new video every week on accounting and corporate finance, so come back and check out next week's video.